Welcome to the Savvy Property Investors Podcast, a weekly show that delivers the best hard-hitting property industry news, business advice, and talks that will get you ascending in the real estate industry. Now, here's your host, the amazing award-winning property and business coach, best-selling author, and serial entrepreneur, Miss Sapphire Gray.
Hello, ladies and gentlemen, and welcome to another episode of the Savvy Property Investors Show. This is a show for newbie and seasoned property investors, coaches, consultants, and trainers who want to become savvy investors and build a legacy for you and your loved ones. My name is Sapphire Gray, and I am your host. Every week, I bring you different episodes talking about the property investment industry and other various business topics on how you can grow as an expert in business. Sometimes we interview clients so you get a better understanding how to learn from them. And also we bring you expert speakers like we have today from the world of property. Today we're going to be talking about understanding finance in a fun way. Many people may feel that finances is one of the things that can really puzzle you when it comes to looking at funding your property ventures or your business, or looking at mortgages, insurances, and so forth and such like. But before I introduce our guests, I want to remind you about a couple of things. If you are new to our podcast, make sure you don't forget to subscribe so you don't miss out on any episodes. And then if you haven't downloaded the Property Investors Toolkit, make sure you go over to our website, www.savvywomen.co.uk, where you can download the Property Investors Toolkit for an amazing price of £37. This will give you all of the steps that you need to build out your property investment business. You all know that walking in the footsteps of someone that has already created wealth through property and business is the way to learn for yourself. Maybe you've struggled on what strategy to choose, or struggled to find properties below market value. Whatever your issues are, there is something for you in the Property Investors Toolkit. So again, head over to the website, www.savvywomen.co.uk, where you can pick it up for an amazing price of £37. And also, we'll have it in our show notes. If you're watching on YouTube, it's in our show notes, and any social media platform that we use that is ours is also in our comments. Please feel free to go over to them. It's now time to really introduce our lovely guest today, Miss Angel Thomas. And I'm just going to read a short bio about Angel. Angel is a single parent of a 13-year-old daughter. From her early teens, she's always had an entrepreneurial mindset. She believes in working hard and learning new skills to achieve her ambitious goals. She decided to become a mortgage broker 18 years ago, after she started building her own property portfolio. Angel then decided that it was essential to have passive income because she wanted to have a better life for herself. Angel didn't want to endure the hardships that her mother went through. Growing up, she witnessed her mum working 2 to 3 jobs to put food on the table. Angel then knew that she did not want to go through the same pattern of just surviving. As an experienced mortgage broker, she works with all clients to achieve their dreams of owning a property, whether they are first-time buyers, existing homeowners, or simply refinancing their property, need to carry out some renovation works, start investing in property or a business, or grow their property portfolio. Wherever you are on the property ladder, she can definitely help you to climb even further to the next stage and keep climbing so long as you want to. As she's put it, the galaxy has no limits. So I am your host, Sapphire Gray. Let's get started. Angel, thank you so much for joining me today. Really great to have you here.
Thank you, Sapphire, for inviting me on the show. I'm so excited to be here.
So how have you been today? How have you been in the mortgage world? I know it's really been really busy. You told me before that it's really busy of recent over the last year or so. So has it been really busy for you?
it's been extremely busy. It's like you'd have thought the pandemic, the COVID situation would have stopped people from buying and investing, but it hasn't. People are still trying to invest. People are still trying to remortgage and looking for deals and everything. So I've been extremely busy right now.
So how long have you been a mortgage broker?
I've been a broker for about 18 years now. Yes, I've seen all different, the comings and goings, the different lenders that was there before, and there's been a lot of changes. It's a lot more regulated. It's a lot stricter now as well, because I remember I say the good old days, but like the self-cert days where it's like literally, people used to get mortgages and, but now it's a lot harder. There's a lot more regulations. And you really, as a broker, you really need to know what you're doing. So in order to get your clients what they actually need.
Mm-hmm. So why would someone want to use a broker as opposed to going to their local high street banks to get funding for their properties?
Well, the reason most people use a broker is because brokers have access to hundreds of banks. So whereas most individuals, like you'd probably go to your bank and sort of say, okay, I need a mortgage. If your lender says no, where'd you go next? Because obviously, if you go to the other, and as we already know, a lot of the branches are actually closing down, so you can't even get into your banks nowadays. Mm-hmm. So whereas a broker could have access to probably a couple of hundred lenders, so we'd look at your situation and your circumstances to know that lender's going to accept you, rather than, okay, you may have had something wrong on your credit, or your income may not be enough for that lender therefore. So they're going to say to you no. So with a broker, you've got more chance of actually getting your mortgage and getting a good deal.
That's so true. So what types of mortgages then can you arrange as a broker then?
Well, I'm directly authorised, so I can arrange anything, to be quite honest, any type of financing. So from first-time buyer, remortgages, buy-to-lets, HMOs, bridging, commercial, second charge lending, where somebody may have a first charge on their house already and just may want an additional, rather than taking out a whole new mortgage, may want something additional to add to that, it could be for a short period of time. So so there's like so many different lending that I do.
So, but you have to go through a whole process. And I know it's not just as easy as you're saying it, that you can do the lending. Everyone has to have hit a certain criteria before you can actually put through an application. Is that not correct?
Oh yes. As you said, it's like the criteria, all lenders have different criteria. It's like some lenders may say, okay, we'll accept you based on your income, but then we want to see, like, for instance, some would say they say affordability. Some will say it's 4.5 times your salary. Some will say, occasionally they'll say it's 5, but not many people get 5 times their salary unless you're a professional, like it could be a doctor, lawyer, somebody who's a professional will get higher times their salary, like regarding the multiples. But so it's not straight cut it's not a straight cut when it comes to actually looking for a lender to lend for that client. So it's like you have to know your client. You have to get into their head to understand what they're trying to do, what they're trying to achieve to get them the best results.
Excellent. And that's why I always believe using a broker is to your advantage as well, because a lot of people think, I'm not going to pay extra money to use a broker, but it can be to your advantage, because if you just go to a local bank, they would only look at you in a short space of time, make a decision based on an algorithm, putting through your criteria. Whereas if you've got whole of market, there's different lenders that do have different criteria. So I always think using a broker is to your advantage. Another thing that I've always had people come back and ask me and says, well, can I get a mortgage if I've got bad credit?
Well, depending on the level of credit, because like sometimes I work with clients, depending on the level of credit. I mean, well, the adverse, I should say. Yes, you can. I mean, I've done clients where they've been bankrupt, but obviously you're going to have to wait your time before lenders will consider you. And normally it's about 6 years before you have to, when you've got your discharge bankruptcy, and even people who have had IVAs. And I mean, most lenders, I mean, nowadays it's a case of, okay, they want to see a clear period of like no missed payments, no late payments. But some lenders may say, okay, if it's like a utility bill or your mobile phone bill, if you're late, they're not going to take that as something too serious. But if you've got late mortgage payments, obviously they're going to look at that a bit more serious. But some lenders may still accept you to say, okay, well, it was a blip. Okay, one late payment in the last year or in the last 2 years, or if you've had a late payment on credit cards, make no late payments for the clear period for 6 months. So all of them have different criteria. So it's a case of, for me as a broker, it's like my head is all over the place because I've got to be looking at this policy, looking at their criteria. Okay, I know that one's going to fit on that side there because that lender accepts maybe 3 missed payments. That one's not going to accept no missed payments. So we've got to be clear for 2 years. So you've got to really kind of understand which sort of lenders you're going to. Because when I take on a client, what I always say to them, I need to see a copy of your credit report. So I need to probably see a couple of 2 credit reports because Experian, I used to use Experian, but now I don't find it as good as Check My File or Equifax. So I always say to people, get a copy of Check My File because then it shows you 3 of the credit reports on there. So it shows Experian, Equifax and TransUnion. So these are most of the credit reports that lenders will use to check your credit anyhow. And I mean, some lenders don't even do credit scoring, so they actually look at your case individually. So it's depending on the client and the situation that you're trying to achieve. But so I say it's not, some people say, oh, well, I'm not going to get a mortgage, my credit's too bad. So I'm like, send me the credit report. I always say, send it to me first and I will make a judgment based on that, what your chances are of getting lending.
And what about first-time buyers? Because again, first-time buyers buying a first home, yes, they can do that. But can they buy an investment property like a buy-to-let?
Yes, first-time buyers can become first-time buyers and a first-time landlord. Now, most lenders will actually assess them as if it was a residential mortgage because they want to make sure that it's affordable. So they'll actually, a lot of them are going to look at your income to see, based on 4 or 4.5 times your salary, could you actually afford that if it was a residential, rather than obviously normal buy-to-lets are assessed on affordability for the rental calculation. So yes, it is possible to become a first-time landlord as a first-time buyer.
Okay, brilliant. Because I know a lot of people saying, before you can't, before owning your own residential home, you couldn't get into investment because you're first time owning an asset. But now you're saying that definitely you can get, as a first time homeowner, you can do that under the guises as a first time landlord. Is that correct?
Yeah, you can. Yeah, definitely. Yeah. But what it is also, you've got to bear in mind, a lender's going to look at you as a first time buyer to see, okay, is this really a backdoor residential? Because we call them backdoor residentials, where somebody will take it as a buy-to-let property, where that's why they want to assess it as a residential as well sometimes, because they'll take it out as a buy-to-let and actually go and live in the property. So, depending on, you put it this way, as you know, you could be in some such situations, you could be in a nicer home, obviously, if you've got the money to put us down as a deposit, like the 25% or whatever it is. So, yeah, it's definitely doable. It's possible.
And by the way, that is illegal to do a backdoor investment like that. So don't try to do it, even though it's been mentioned there. Lenders, if you get caught out with that, it is the fine, hefty fine, probably a criminal record. So don't try to do that. Be legit in every transactions that you're doing, so that you just don't get caught out and go to prison basically. So can you arrange HMO finance, and how do you do the calculations for them?
Yes, I do arrange HMO finance. HMO finance, once again, it's all lenders have different criteria and they do different calculations. I mean, normally it's worked on the number of rooms you have in a house. The different calculations, literally what I normally do, I normally go onto the different calculators to see what the maximum borrowing I will get. So there's no straight rule fits all, literally, because they're all different. I mean, so a lot of the lenders have different criteria regarding that. But I mean, HMO, it's definitely a good business model, and it actually works, and people are making a lot of money by doing HMOs.
And how much can you borrow on a HMO? Is it the same criteria as a standard vanilla buy-to-let? or is it different?
Sorry, your volume went a bit low then. I couldn't hear you.
Yeah, I'm saying, is it when you're looking to borrow finance for a HMO, is it the same 75% loan to value, or is it there's a different calculation to do that?
Yeah, sometimes it's going to be 80%. Occasionally you may have an offer of 85%. So yeah, it just depends on what's available at the time, to be quite honest.
Okay. Is it also possible to do a one-day refinance? And we're hearing across the news that, there's some new tech that you can actually do financing now for one day. Is that actually true, and is it possible?
When you say financing for one day, you mean to take out a loan for just the one day, or
Yeah.
what type of financing
Do you
talk about?
Is it possible to do a one-day refinancing? So you're borrowing
one day
against
refinancing.
yeah.
Yeah, so basically, a lot of lenders, we call it day one refinancing. So if you was to buy the property like yesterday, and then obviously you're looking to remortgage the following week or whatever, so you're not going to actually hold the property for no time. Now, there's a couple of lenders that will look at it, but then some lenders are going to look at, okay, based on you bought it for this price yesterday, now it might have been below market value. What have you done to increase the value? So they're not going to necessarily want to give you now the market value because you bought it for 200,000, but the property was really worth 400,000, and you want the uplift of the 400,000 straight away. So unless you can demonstrate as well that you've actually spent money on the property, refurbished it, done a renovation to get the market value, then that's what they would consider. So yes, there are a few lenders that will look at day one refinancing.
But that's then again, if you're saying about renovation, that ain't going to be one day renovation, because
no, it's not.
Demonstrate that there's an uplift in it. You can't do that. The only way you can demonstrate that, I believe, is if you bought the property below market value. It did already have, but it was somebody that needed to sell quickly, and the equity was in there. Could you do it on that basis?
What it is, lenders don't tend to like it because they don't tend to like it. So it's like a case of you've got to put it to the underwriter to see what the tolerance is going to be.
Excellent. All right, join us after the break with more insights from Angel.
Like what you hear so far? Make sure you never miss a show by clicking the subscribe button below. Our podcast is only made possible by great listeners like you. This week's episode of the Savvy Property Investors Podcast was brought to you by our sponsor.
And welcome back. Thank you, Angel, so much for sharing those great insights in our first half. You talked about what is types of mortgages you can arrange. Can you get a mortgage for bad credit? And yes, you can. And these are all based on criteria from lenders. And can you purchase as a first-time property owner an investment, get an investment mortgage? And yes, you can do that as well. So can you explain to our viewers and listeners what is exactly the mortgage process that you have to go through?
Well, when I meet a client who may want to take out a mortgage, first thing I always say is, okay, download a copy of your credit report, because without the credit report, you could just be going in blind. I mean, back in the day, I remember people say, yeah, I've got good credit. Yeah. Can you get me a loan? Yeah, I'll put A star. So then you start submitting the application, you get declined. You're like, why is it declined? And the client, and then the lender says, oh, you need to check the client's credit profile. I'm like, okay. So anyhow, I don't make that mistake anymore. Long time done. So yes, I'll check the credit file, and from there, then I would normally arrange a meeting with a client or a Zoom meeting, and would go with a fact find document. Now, a fact find document is quite a long document. It's quite in depth as well. So it talks about obviously you, who you are, how long you've lived where you live, how long you've lived there, what you work as, how long you've worked there, your income, if there's any additional income, your savings, where did you get your savings from? What are you actually trying to do to, is it a buy-to-let or remortgage, but residential? And it obviously talks about your wants and needs, if it's a fixed rate you want or a tracker. So it just talks about, I get a good insight of what you're trying to do, so I can make a judgment on, okay, what type of lending you're going to need. So once that's completed, then what I would normally do, I'd normally go and do some research. Now I have different research and tools that I use to go and look at the different lenders. So obviously most people want obviously a good rate. So I'd look at the rates first. Based on the rates, is this lender going to lend to that person? So I do a research that will probably take me a couple of days just to check the different lenders out, check out the criteria. And then I would make a judgment call to say, okay, based on your situation, this is the best lender. So then I would produce a KFI, a key illustration document, which will show you what your monthly payments are going to be, the loan amount's going to be, what the lenders, any fees that the lenders are going to charge. So if you're happy with that, then I will go ahead and start processing the application. So I'd submit the application and I'd submit all the documents to the lender. So they would normally require sort of bank statements, pay slips. So I'd make a list of the documents required to the client, and I'd get those in advance anyhow, to be quite honest. So it could be your tax returns. So once that's been done, so then it goes through like processing and then underwriting. So the underwriter would be looking at the case to see if it's going to be acceptable. So then a valuation would be instructed as well. Now, sometimes the lender will pay for the valuation, or sometimes the client will pay for the valuation. So the valuation would happen. Now, based on the valuation,
pay for the valuation. Sorry to cut in.
Oh, why would they pay for the valuation?
Yeah.
Oh, it depends. I mean, some lenders offer free valuations. Normally, that's only majority of the time it's for remortgages, because they feel like if they've got the business, let them at least maybe give something. Not all lenders, but occasionally you might get a free valuation. So when I'm looking to see what the lenders, what type of lending I'm going to get, I'm also going to look to see if they've got any freebies. I call them freebies because they might have valuations thrown in and free legals. So obviously it's more beneficial for the client. So so once the valuation has been instructed, then the valuer will go out, check out the property to see if it's actually worth the money. Now the valuer is actually working for the bank, because obviously they're making sure that the property is of value for the actual bank rather than the client. So based on the valuation, if it comes back okay, then that's fine. They'll send that in, and then what will happen? The underwriter will now look at the whole application and the valuation and everything, and then provide a mortgage offer. So once you get the mortgage offer, it's like, hey, and then from there, obviously conveyancing would start. So the solicitors will start doing all the legal paperwork regarding in the background, obviously, to get you to completion. So it is a bit of a long process sometimes. I mean, realistically, from start to finish, you could be looking at anything from, I don't know, sometimes to get an offer could take you maybe a couple of weeks or a few weeks to get an offer. And from there, then obviously the conveyancing part could take another 6 to 10 weeks for conveyancing. So it can be a long process, but worthwhile.
Excellent. So how much can you realistically borrow then?
Depending on residential, right now, obviously there are some 5% deals. So I would always say to people, obviously, the more money you put down, the better rate you're going to get. Because as you can imagine, obviously, if you're only putting 5% down, your rate's going to be higher than somebody putting 10% down. So residential is anything between 5 and 10%, and buy-to-let is anything between 75 or 80%. Now there are 80% deals available, but once again, you need to meet the criteria, and the rental calculations need to be quite strong in that area as well, because the way they do the calculations, once again, it's quite complex. They're looking at higher rate taxpayers, lower rate taxpayers, different types of multiples. So it's a case of you need to as a broker, I know. So I know what sort of deals are going to get 80%, which in London not many, to be quite honest. But
So the borrowing for sort of like an investor will be sort of 75% loan to value. And what about residential borrowing then?
I would say for borrowing for investors, I would say more so 75%, but you could get 80% depending on the actual property and the rental calculations. And residential, I would definitely say between 5 and 10%. And don't forget, I mean, you can also borrow money, like for instance, for borrow money, you may actually get gifted deposits as well. So I do work with clients that may get gifted deposits and may not even be putting any of their own money in as well. So it could be a gift for mum and dad, or for instance, they may even get a gifted property where they're not putting none of their money, but they're actually purchasing the property in their own name.
Okay. That makes sense. So what are some of the types of property mortgages that types do you have out there? We know
so
there's a variable rate and fixed rate, but what other rates are there as well?
There's like tracker rates, offset rates. I'm trying to think. There's so many. The tracker is going to track. Yeah. The tracker was going to track the Bank of English base rate. So it just tracks. For instance, if we have any rate adjustments, obviously if it goes up again, then obviously your payments are going to be higher. Now, most of my clients, and always try and advise clients, it's always probably better to look at a fixed rate, because at least you know what you're going to be paying throughout the term of that loan. Because as you know, I mean, who knows what's going to happen right now anyhow. But if we get any big hikes, obviously you could be paying 500 one month, and then next month you could be paying 700, and that could make a big difference to somebody and their, you know, their cost of living and their outgoings. So I always sort of recommend, okay, look at the fixed rates, because that might be better for you. Maybe a tracker, if you was just do it, if it was going to be like a short time, maybe like a flip or something, where you just didn't want to be stuck in or tied to any rate.
Yeah. What are some of the craziest cases that you've come across over your 18 years that you just thought it would never happen? They're not going to get a mortgage, but they actually managed to get it. So what's really a good one that you've done and achieved?
You know what? I think every case there's always a little something between every case. It's like I think I had one recently where the client's credit was fine, everything was perfect. Well, when I say perfect, good enough anyhow. So anyhow, got the offer. And then as the time went past, because she decided, okay, she's going to buy a new build property. So obviously then I had to go back in, because obviously the time had elapsed where that offer had expired. No, it wasn't an offer. I think I got an agreement in principle. Yeah. And then, so I'm applying for the new loan, once again thinking, oh yeah, it should be fine. And next minute I realized, oh, you've had a late payment. I'm like, no way, why would you do that? But once again, it's an accident. Nobody, and the thing is, it's such a small amount anyhow. That I tried the one lender. They said no. Then I tried another lender, because they said that they would accept it based on whatever. They said no because of some other reason. So it's always some other reason that they can or may not accept it. Now because of the income, because some lenders will only take one sort of income, rather than some lenders I use will take two sources of income at 100%. So there's always some trials and tribulations along the way. But I'm a type of person, I don't give up easy. I like to put it this way, if I believe in it, it should go through, I'm going to find you a lender. Because if I put it this way, I always tell people, this is your chances. If I think it's 50-50, it's 50-50. And I'll say, okay, we can try it. If not, we'll try it. If it doesn't work, we'll have to wait maybe 6 months until we can try again, or we'll have to wait until next year till you've got the correct paperwork or your income's increased or something. But if I believe I can do it, I will do it for you, and I'll make it happen. And I don't give up easy.
I'm testament to that. She does definitely not give up easy. We had a difficult case with myself. I've got good credit, got investments, got money, and yet it nearly took us 1.5 years to do one finance on something we was doing. So she never gives up. She's always persistent for clients, and she's my mortgage broker. So absolutely would recommend her 100%. So Angel, how can our listeners contact you and learn more about your services that you offer?
Yeah, they can find me on Facebook, Instagram. I'm sure if you could share my details with them. But my company is called Into Equity. That's IN, the number 2, so the digit 2 equity. It's EQUT. Oh, gosh, I know we say it so often, I can't remember. Into equity. I am number 2, EQUITY. So you'll find me on
Perfect.
Instagram, Facebook. Yeah, that's how you can locate me.
And just to let you know, Angel also has other companies. She is a mortgage broker and protection advisor. That's her Into Equity Limited. She also has financial awareness online coach. That's her Financial Smart Academy, where she teaches you about financial awareness. Agents are us. Is her estate agents, and her development companies. Is it agent? What is it?
It's called Agenteur.
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 Yeah, it's her development company. So, ladies and gentlemen, thank you for tuning in. So, and make sure you check out Angel with this interesting interview that we've had today. Thank you so much for being on the show with us, Angel. It's been an absolute pleasure to have you here. Don't forget to watch and listen to all our podcasts. So you can join us over on our YouTube channel. Don't forget to subscribe, rate, review, download, and share. Thank you for listening to the Savvy Investors Property Show. It's been an absolute pleasure to have you here, Angel. Thank you to our audience as well for listening.
Thank you. Thank you for having me on the show.
You're so welcome. Bye for now.
Bye-bye.
The Savvy Women Group. Thank you for tuning in. If you enjoyed today's show, head over to our website www.savvywomen.co.uk to gain access to our free resources and more insights about our guest speaker today. Remember, we make your business our business so you can unlock your full potential and improve your quality of life.